Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs and articles on ospreystrategic.org as well as StockCharts.com. So we've still got a sideways bull market trying to grind through here. What I wanted to do today, just because the market's been sideways for 6 going on 7 weeks, is just what are breadth indicators and talk a little bit about that. Well, I think that's the most important thing here, is just understanding why the market is grinding sideways. And again, what is breadth and how does it help us analyze the market? And I think if people understand breadth, I know when I started looking at the markets, I didn't really focus on breadth as much as I do now. But breadth is really the, how many cars are driving down the freeway the same direction. And when you've got lots of traffic all going one way, that's easy to trade the trend. When it's kind of, roundabout in France or something, and traffic's coming and going and spinning in circles, much more difficult to invest in there. So anyway, that's what we're going to cover off today. I want to just point out, if you'd like anything over at Osprey Strategic, we always have a 1-month trial offer for just $7, and you're welcome to go try that out at any time. And as always, thank you for taking the time to watch Market Buzz. Okay, let's jump into the charts. So just as an example on Osprey Strategic, if you wanted to go into our free tools, here's articles and videos. I have a recent article called Bitcoin from last week, and you can click in this article. It's all free here. I am doing a presentation at the Money Show on May 17th, 2023, and we'll put a link to that in the bottom of the YouTube channel here so that you could access it if you'd like to. It's at 3:20 p.m. Eastern Time on Wednesday, May 17th. Okay, so let's jump into breadth. And there's a whole bunch of different ways to look at breadth, and I want to show you a couple of different ways and what we're trying to see here. So first of all, up at the top, this is the Nasdaq composite. And what the word composite, just for beginners, means everything in one stock exchange. So, or whatever index we're defining. In this case, we're defining the Nasdaq stock exchange, the composite index, so all of the stocks. And what we have done here on the bottom panel is the advanced decline line data for the Nasdaq. Now, what the advanced decline does is it tells you what percentage of stocks, what number of stocks are advances versus decliners, and every day you get a total, and you either add or subtract that from the prior day. Now, one of the biases on the Nasdaq is that it traditionally leaks lower. So I'll just roll this out for you. Just whatever. Pick a long period of time. What you see is the Nasdaq here, really, for all the big bull market we've had, this thing hasn't done much, and you could just see how weak it's been since 2022 and hasn't really started to thrust back up at all. Now, in 2020, when the stock market was euphoric and took off on that SPAC boom, we had a nice run up. But in 2021, even though we still had an uptrending market, the Nasdaq was trending lower. So it's best to use this indicator on a short-term basis because of the negative bias that it has long-term. And the reason we call it the reason for that is it has a lot of biotech stocks, a lot of high-tech stocks that eventually don't make it. But it's the high risk, high reward in that biotech space. If they do get their technology approved, the stock can obviously go to the moon, but for every 5 that go up, maybe 7 go down or something like that. So you have this weighting where it's inconsistent. Okay, I'm just going to flick back and get back to our regular settings. Okay, what I've done in the middle panel is just put a 2-week moving average, so an 11-period moving average on it, of this advanced decline line here at the bottom. What it helps show you is just not to get so hung up in 1 day or 2 days, but what we want to watch for is can the market start to break out one way or the other? And typically once you start to, what you'll see is even here after the declines in December, right at the beginning of January, we finally started to thrust up. And you can see we broke a downtrend here for November and turned up. In October, November, the stock market, the Nasdaq, was pretty much sideways. I mean, it went up from mid-October to end of November. But in general, what you saw was the advanced decline line wasn't very strong and didn't really help. Contrast that with January and look at all of these days that had big, strong, positive advances versus decliners. And that's what we've been trying to find recently. And again, the large cap names have carried the market forward. Yes, there have been other stocks moving up, but not nearly with the influence on the market indexes like the big 5 or the big 10 stocks. So when we see this advanced decline line, and even as late as Monday, it looks like we're going to try and break out. We have a nice positive Monday, and then Tuesday comes right back and disappoints. And again, it looks like we could threaten to break down here. So it's really a knife as to which way this goes. So this is what's called the advanced decline line, and it's different than the high-low data. So on the advanced decline data, again, it's each day, if there's 580 stocks advancing and 320 stocks declining, you've got a positive difference. So that would give you a green total here, and you break down. Obviously, those numbers are not anywhere close to the actual values. We're up here around, on each given day, you could be, 2,500 stocks advancing or something like that. But my main point is this is just keeping track of how many are advancing. And so the problem recently, since the beginning of February, is we've had more stocks on the Nasdaq declining than advancing. And so that's generally skewed our bias lower. However, that's not evident on the stock exchange price because of the weight of the mega cap names that have been holding up. So then we have a different approach, and this other approach is the new highs minus new lows. So each day, let me just go get another chart. Let's take Amazon as an example. So Amazon is sitting here around 6-month highs. But if we go to something like Meta, what we see on Meta was, we'll just create a 1-year bar here. We're going to go from June to June. Actually, June to May. And what you want to do here is you want to look for stocks making a new 52-week high. And so what happened is right here back on April 1st, Meta actually made a new 52-week high. It was the first time it got above the price from a year ago. Now, as you can see, as long as it continues here, this works. But on this particular day right here at the end, so up here we made a new high, but now this stock has not made a new high for 7 or 8 days. That's not a problem. But just to say that when it starts to break out, as long as it keeps climbing, it will add to that new high total for each day. But for example, since May started, it hasn't really made more new highs. And so it would not be in the total of new highs or new lows, but at least you'd have a reason. Now, what we can also do is take this the other way. And obviously here the stock is making a new low, and then it makes a new low almost every day. Pauses in here for 2 weeks, then makes more new lows. And so you get the idea that we're trying to figure out how many stocks are actually breaking out to new highs or breaking down to new lows. And the reason I want to go through this at such an elemental or low level is for newcomers who might not understand why we care about net new highs. And so the idea on this chart, again, is not to confuse it, but if you have a whole bunch of stocks making new highs, that's more bullish than stocks making new lows. So let's go to the Nasdaq. What you see here is during the uptrend of 2021, and I can even add a little bit more data here. Let's go to, what we want to see here is during coming out of COVID, we started to have a few stocks making net new highs, and then running into that SPAC top in February of 2021. We literally had all these stocks super soaring, and we were up around 750. Then we got into the March to December timeframe, and really we just kept wandering sideways. And then right at this point here, all of a sudden, what you see is this indicator changed dramatically and started making more new lows than new highs than any time in the previous year. And so we really, it told us there was definitely a trend change. And what we were watching for was to just say, or is the market going to break down here? And the reality was, once it started to actually drop this precipitously, and notice how it kind of pushed up to a new high and then fell away. What you saw was for the entire year of 2022, this thing was unable to really get above zero for any meaningful period of time. And in late August on this peak, we briefly did. And then in January, we started to surge, but then we just couldn't continue it. And so while the price action has been climbing from, I'll call it mid-March, really the Silicon Valley Bank low, we've climbed out of this hole on the index level, but in terms of net new highs, new lows, we're still not getting there. Now, at the start of any bull market, it's hard to really have a lot of net new highs because most stocks, like that Amazon stock, was way down. Meta was way down. So it takes a while. Like, it's not the first day it turns up. It takes a whole bunch of consecutive periods to get back to a net new high or to a new high. So when we add up all of the stocks on the stock market, in this case the Nasdaq, we're trying to figure out whether or not we've got more stocks making new highs versus new lows every day. And so on Monday, we were 69 more new lows than new highs, even though the market closed up that day. So still a weak picture. Now, one of the things, again, using this 2-week moving average, is you can see during a big bull market, it stays positive. And then we started to shake a little bit here in October, August to October of 2021, and hit our big high. Everything looks good, nice big thrust. And then we fell apart from there, and literally we spent the whole year negative. And now we've pushed up in January, and then we've been negative for the last 3 months. So if we don't look at this data and we just ignore it, what we would think was the stock market's, again, it's trending higher. But the two top stocks, Microsoft and Apple, make up 14% of the S&P 500. Now, that's not the index we're looking at. But compared to all of those biotechs, it is a huge weighting of these two companies leading the force. So if they're trending higher, or even if Meta, Google, Microsoft, Apple, Amazon, if those names are heading higher, the stock market index will head higher because it's weighted depending on the total value of the company, rather than saying a small little biotech is worth the same as Apple in terms of importance. So a 5% move in Apple means a lot more than a 5% move in all the other stocks. Again, this gets back to the breadth thing, and what we're trying to figure out is how many stocks are actually improving with this bull market. And I think what this middle panel shows is, even though the market's been wiggling higher, we've actually had quite a bit of negativity here in terms of net new highs. So we've had a lot more stocks making new lows than new highs, and yet the market continues to grind higher. So it can do that for a period of time. The real question is, if we don't start seeing more stocks join the new high party, then eventually the market just runs out of gas on its own weight and starts to turn down. So this is a really simple way of just trying to analyze the bigger picture on stocks. Now, the interesting part about the Nasdaq is it has, again, a whole different composition. I'll call it more stocks that have more beta or move faster than the indexes both ways. Some might say riskier stocks. But when we unwind this tape, what we see, looking broadly, is if you're in a big bull market, the middle panel should stay green most of the time. And look at how much down pressure we've had over the last 3 months, and yet the market continues to hold up and actually hit new highs. This is, in the last 3 months here, this is on rating with some of the big pullbacks, the 20% drop in 2018 from October to December. That drop was pretty meaningful, and yet we've had a lot of undercurrent selling. We could all of a sudden have a whoosh down and actually get that 20%. But it would literally be coming off the high, not after this has been beaten down for a while. So it's really interesting to see, again, how much the tech stocks have held this level or the trend higher and really outpacing anything we've seen in the last 10 years. Almost every other, I'll call it glitch, with the market dropping this hard, as you'll see this middle panel dropping this hard. There's almost a concurrent dip on every single one of these up until recently, this whole 3-month move with quite a bit of negativity, and yet we still see the market go higher. So it's a real contrast in style to what we've seen historically. And when we talk about the market being difficult here for technicians, this is one of the indicators that's really clouding our judgment. Are we just having the final few stocks carry us forward, or do we actually roll over and everything starts to fall precipitously, or do we actually turn and give the rest of the stocks time to kind of get their footing, and then they can start to go higher? So on Monday, May 15th, the market's up, and so you start to have some feeling of resolve, and maybe the market could actually tick higher. So that was net new highs, new lows. Then the advanced decline line is similar to this up volume or down volume. And what this chart does is it says if a stock is up and it's got a volume weighting to it. So you've got what advancing volume you've got and declining volume. So as an example, you could have Apple up and everything else down, but because Apple trades so many shares, perhaps the stock market still actually had more advancing shares than declining, in a radical example. What you see back here in the end of March was a pretty significant move in the indexes, and this is coming off of that banking low. Maybe I should just take this out 2 months. And what you see is coming off the banking low, we had quite a few shards here where the up volume was significant, and down here in red I've got the declining volume. What you've seen in May is we've actually had quite a bit of advancing volume, but not a lot of down volume, and the index kind of creeps higher. So these different factors, the idea behind looking at them all independently, excuse me, is trying to figure out which way the market wants to go, obviously. And again, we've been going roughly sideways since early April. We were at, in this case, 12.2. We're at 12.377. So, and most of that's been, again, a slow, gentle grind higher. But the real thing that we're looking for here is big pushes higher, and that's when the market really starts to move. This was a good indication at the end of April when we got some of the large tech companies reporting. Indexes moved dramatically that week, and yet we didn't have a lot of advancing volume. So 3 different ways to look at it, and it's important to understand which index you're focused on. So in this case, this is the Nasdaq. The next three charts, I'm not going to go through the same level of detail, but I do want to show how different they are. So on the Nasdaq, we still had, okay, this is the advanced decline line. Let's just go back and look at this one first. So here, with this big downtrend, and what we're trying to figure out, is it going to break that downtrend? When we go to the New York Stock Exchange, again, a different composition. What you see here is you've got the big downtrend. We broke that in January, pulled back down, tried to rally back up, and then that kind of gave us a second place to base a trend line on here. Now we've got a trend of rising lows on this advanced decline line, and on Monday, we're bouncing up and everything looks good. Maybe we're going to do another thrust up, and here we are on Tuesday, and we're actually starting to break through the downside of the line. So a difficult point on the chart to try and figure out which way this chart wants to go. And again, the trend on the New York Stock Exchange has been that we're actually tilting down. Remember, the Nasdaq was tilting up. So just a whole different group of stocks. And I mean, there's a lot of stocks on the New York Stock Exchange here. Big thrust days up are 2,000 and down days are 2,000. So I'm recording this on a Tuesday morning, and we've got, almost 2,000 stocks negative first thing in the morning. So when we see these indexes, it's important to look at what index we're looking at. Again, where are the large cap stocks sitting? And then when we see this sort of big trend change, are we about to break down here? And again, one day doesn't make a change, but we want to be aware of those trend changes. So let's go look at the new high, new low for the New York Stock Exchange. And this one does almost a better job than the Nasdaq of showing, as we came off the COVID lows, started to improve net new highs. But look at how few shards down we had, basically stayed up really high. We went all the way through the SPACs and all the way into May. And what happened on this May the 10th day here was all of the material stocks, literally copper, steel, all those stocks, kind of marked a high on that day and started to break down meaningfully. And then what we saw from there forward was a weakness where this just kept making lower highs. And again, we got to November, December, and this all of a sudden trend changed from really strong high-low data to really negative. And then we can't get back up above this line I've got sitting on this chart. I think it's at 100. Let me just look. Yeah, it's at 100. So you've got this line on the chart at 100, and even on small thrust rallies, we can try to get above it. But it's significant that we're just stuck in this kind of bear market mode. And when we look at the high-low data going back for, all of the run coming out of COVID, this stayed positive for all the way till November of 2021. And that's really when the Nasdaq made its high. The S&P went on to make a higher high in early January, just a marginal higher high. And then this sat negative for the whole period. Now, you see these little bumps in here that we endured during the 2022 bear market. And what we just saw in March, April here was this tried to rally and then failed. So are we back to this environment, or can we actually, are we just getting things rolling and we're about to break out to new highs? Well, again, the index on the New York Stock Exchange is pointed down. We've got an uptrend line we could draw here. Probably don't want to see that start to fail. Let's just grab that data and draw that on here like this. And then, again, we've got kind of this declining period in here. And, don't make too much of the decline, because on any given day you could spike quickly. But I think what's important is we just don't have the net new highs showing up, even though we're, 6 months into the rally, or 4 months into the rally, depending on what day you want to talk about the top was in. All of these clues are trying to tell us how difficult the market is here. And so we want to work through that. Again, at any point in time it could change, but the real question is, do we start to break down from here, or do we start to break up and out of here? And again, on Monday it looked positive, and on Tuesday it looks negative. So it's, one day doesn't make a trend. Now, I've widened this out. This is the up-down volume on a 10-minute chart. Now I can change this to a one-day chart, or whatever. Let's just do 5 bars a day just to kind of change the view. And then what you're seeing here is that, there's no real favoritism one way or the other. In December, heading into the end of December, we started to see some real big spikes up, and a lot of activity in January on the positive side and very little on the negative. I would say we've still had some positive activity in April and May, but we've had just as much or almost as much negative. So we're just not getting that trend change that we're looking for. And again, drawing a line off the October lows. Whoops. Let's go get that again. Drawing a line off the October lows tells us how difficult this market has been. And what we want to watch for is, can we finally break out of this sideways melee? Really, we're back at November 2022 prices. What would it take to finally get us going positive? I'll just cancel out of here. Okay, so again, the whole idea behind these advanced decline data and up volume, down volume data is to try and make it easier for us to see the internals of the market. And so hopefully by showing you those two, I've given you an example. And then the other way you can post this or process this is by looking at the Nasdaq net 52-week highs. You can see it's tilting down here. Zoomed in. This is the moving average in blue, and we haven't gone anywhere. And then looking on the New York Stock Exchange, same thing, going sideways. On the Nasdaq, we're making less new lows, but we're also making less new highs. We just can't get going. Or on the New York. So these are, the top two were highs and the bottom two were lows. And again, we just can't get either one of these trends to really start forming like they did in 2021 and 2022. So pretty important to see the difference. And I think if you can add some breadth into your analysis, it will help you understand the difficulty of why the market has been so sideways for the last 6 or 7 weeks, but also what does a bull market look like? What does a bear market look like? And, real quick, here's the net new highs during 2021. Here's the net new lows during 2022. And you can clearly see the difference. It really starts to change the complexion. So we're watching to see which way this market wants to break. Right now we've got a little bit more on the new low side than on the new high side. We're just not getting the thrust that we want to see. So hopefully you can use this video in the future, bookmark it if you'd like to. But thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks for joining me. Bye-bye.